Let's start with that, with the Fed, whether it's Powell, Brennard, or somebody else. Do you think the Fed's going to be able to move next year? Markets are saying maybe late next year, early 2023.
Our base case with the Fed is that it dovishly tapers before the end of this year. In terms of actual rate hikes, we aren't expecting official rate hikes until at least late 2023, and the risk to that forecast is always later. We're expecting central banks will get much more cautious in coming months about their forecasts to lift off sooner rather than later, certainly a lot sooner than when the AIT framework, for instance, first came on the scene. What I'm trying to say here is that the risk of policy error is quite high. Tightening, tapering into a structural supply shock never ends well, and certainly the demand side is somewhat lacking, to put it nicely. Yes, later rather than sooner, and the risk of policy error is our concern right now when it comes to the Fed. Of course, who's running the Fed is also a factor, whether it's Powell, Brainard, Bostic, I think is an outside chance as well. Regardless of who is Fed chair, that person will need to be focusing on all of those factors that I've just mentioned. Key question for markets, I think, in the longer term is to what extent the central banks will be recruited by various governments for to get into a much more streamlined agenda.
Okay, now what does it mean then for I know this sounds like a very simple question, but just to allude to the point you made a few minutes ago in the earlier segment, that the issue we're going into is a year of dollar liquidity. Could you just frame that for us in the context of tapering in policy?
We put out a note in June, and we found that global liquidity, which is really simply proxied by global money supply, when that declines, and it has been declining since, really it's been more than 6 months now, we find that it's bullish dollar, bullish government bonds, typically in terms of global assets. Defensive stocks tend to outperform cyclicals. Emerging market equities tend to underperform. Asian equities tend to outperform broader EM, for instance, and or agriculture tends to outperform other commodities from a cross-asset basis. And if you look at the performance of global markets, most of those trends have very much played out. The Asian asset outperformance of EM, a little bit tricky given the China factor there, and that's certainly the most dominant factor over liquidity at this point in time.
And what about just this decade-old story of DMs, U.S. outperforming EMs? I mean, is there any sign that that's going to reverse next year?
Very little sign at this stage. It still looks like the US is in the best place in terms of ability to deliver policy support to rather lackluster demand. EM is in a much much less better placed, I guess, if you can put it that way, to support their domestic demand outlooks. They've used up a lot of bullets over the pandemic, and if you think about relative vaccination trends, which is a key factor to reopening, many emerging markets lag at this rate or at the current rate of vaccination. Where we are not looking at double-dosed emerging market populations for quite some time. So that wedge between DM versus EM is likely to persist for some time to come.
And even in places where you have very high vaccination rates, and I'm going to Europe with this question here, Sue, certainly the news over the weekend from Friday, and whether that's protests in the Netherlands or what you're seeing over in Austria. I mean, should markets start looking at what's happening in Europe as a material risk to the recovery reopening story?
It absolutely is a risk. There's still a lot about the virus that even experts don't know. They're really just flying by the seat of their pants and taking it as it comes. We're learning as we go. And what has been really clear over the past 2 years now in this pandemic is that we see rolling waves, and high vaccination trends don't typically correspond with reopening. There are many outliers outliers in that regard. Take, for instance, Singapore, from where I'm speaking from, very high vaccination rates, but that hasn't really meant an escape to the rolling lockdowns. And if the trends in COVID that we're seeing in Western Europe, hold sway, then we can expect it to hit the US and possibly the rest of the world in a very short order, thus exposing many economies still to rolling lockdowns. I don't think that the end is necessarily as nigh as commentators may think.